Welcome to the Roetzel HealthLaw HotSpot. HealthLaw HotSpot is a podcast for physicians and health professionals that covers the legal issues and trends that affect the healthcare industry.
Hi, everyone. Welcome to the HealthLaw HotSpot. I'm Ericka Adler, shareholder at Roetzel and Ericka and leader of our healthcare practice. Today, I'm joined by Sruhad Patel from Alera Group. And Sruhad specializes in advising physicians and medical practices about malpractice insurance issues and working with them on any malpractice needs they may have. So today we're going to be really talking about some unique questions that come up. They may be questions that I have, or they may be questions that clients have related to malpractice insurance. And I'm hoping we can get some answers today that are really helpful to everyone. So thanks for joining me.
Thank you. Thank you for having me.
All right, so let's talk a little bit about what insurance covers and what it doesn't. So I know this comes up pretty often, and one of the things you and I have talked about in the past is what doctors sometimes think is covered versus not covered. And we know clinical services are clearly covered. Now, when you provide services at multiple locations, do you need to let the carrier know about every location, or is it just all the services that you're providing are for your medical practice are covered? How does that work?
Yeah, you should always let them know about every location that you work at. Obviously, the policy is going to be rated based on like the county or the highest rated county, as we'd say. But best practice would be to let them know wherever you work, just so they have it on file.
Okay, great. So I know now that, it covers for sure malpractice claims. So patients complain, but there are other things that your coverage might include as well, I guess, depending on the quality of the carrier, right? So what are some of those things that you might be able to look to your policy for that you might not realize?
Yeah, most people don't realize that they have coverages for like licensure actions, like if your license were under review, so they would cover you for that. Or if Medicare or Medicaid had some audits, they have some sublimits for that. Similar situations, it's a very small amount, but those are automatically built in, and the policy will respond for you on those certain situations.
Right. And my understanding typically is that you can often use a lawyer that you're comfortable with. And in that situation, you don't automatically go to a firm contracted necessarily with the carrier that does medical malpractice defense, because licensure type stuff is a little bit different. So I always try and remind my clients that they can look to see if they have that coverage. Now, there are things sometimes that I think my doctors think are covered by their malpractice insurance that aren't. So what are some of the common things you come across where somebody thought that they were covered, but they weren't?
The biggest thing I see is medical directorship. And to step back, I'll pull it into two separate things. Medical directorship usually has like the clinical portion and then the administrative portions. We believe that the clinical portions would be covered because anytime you see a patient, you're covered on that policy. It's the administrative duties that are not covered on there. And many physicians think that if they're a medical director at a nursing home or a long-term care facility, that they're automatically covered for medical directorship on their policy, but that's not true.
Okay, that's good to know. And then one thing that I always tell my clients as well is that if you're signing a contract to be a medical director, that I like to see that nursing home providing coverage for your administrative services. So that's something that you want to make sure is in those contracts as well. All right, so we've got doctors, they're working in a group, they're covered by insurance. And one of the biggest issues, particularly if it's a younger physician who's not a partner in a practice, would be what happens when you go to leave and you have to deal with a tail situation, right? So a lot of contracts will say, hey, we the practice, we're going to buy it. Or they'll say, doctor, you buy it. And then in the contractual negotiations, we're saying, okay, well, I'll buy it if I'm the one that chooses to leave. But otherwise, you practice, you're paying for it. Now, that tail can be quite expensive. And typically, I know when I'm on the practice side of this, we're looking for the doctor to buy the tail from the carrier that covered them while they were there. But I know that's not the only option. But what kind of options are there? Are they as good? Are there really a risk, to everybody if they don't go with the carrier? What's out there?
Yeah, there's many options available. So there's an entire market called the standalone tail market. So there are many carriers that will offer coverage for those tails. and they can be cheaper. A few things to keep in mind there is they are in the non-standard market. So they're not regulated by the Department of Insurance. They don't have like a guaranteed fund. If, like, for example, if they went out of business, you're on your own. So those are all things to consider. Sometimes you're absolutely right, Ericka, because employers will say, nope, you have to buy the tail from that same insurance carrier you've been with. Other times they don't. So again, they have two options. If there are maybe alternate or cheaper competitive options, sure, but keep in mind that there's a certain risk out there. But I guess I would say also they are very large companies available as well. So I think there are good options available, but you have to make sure you have the right one.
You have to do your research too.
Yep.
Now, I noticed that there's a lot more, and I see this in Illinois where I didn't really see this before, of requirements to obtain tails for certain lengths of time. So you can buy, tails that are 3 years, 4 years, and indefinite. What do you see happening in that market? Or is it just become too expensive to buy indefinite tails? Is that why we're going for shorter lengths of time, or what's going on?
Yeah, I think both physicians sometimes have a financial restraint, so they can't buy it. I mean, our suggestion is always get the unlimited. I'm sure you've read the statutes more than I or understand them more, but I mean, there are, whatever the statute is, it's like 2 years from the date of discovery. There's so many exceptions to that. And it's just, is it really worth the kind of paying just a small percentage less of that of the tail to get a shorter policy? I don't think so. We've seen that unlimited tail policies are, let's just say, X amount of premium. The shorter ones, 3 to 5 year, you're only going to save like 10%, 15% of money. And at that point, is it really worth it?
Right. I guess, you take the risk. And one of the things that we've talked about in the past is that typically we're not seeing, cases where doctors are being pursued individually for amounts in excess of limits. Usually we're seeing settlement at limits.
Mhm.
But if you don't have a tail, or your tail is too short based on when a claim is brought, we may see, a growing shift in doctors somehow being, more responsible for paying out of pocket on a claim. Have you seen that happening, or is that just something you think we're going to have to wait and see?
No, I think we're just gonna have to wait and see. I would say most to majority of the people that do purchase tail, it's unlimited. Very few are getting a shorter length where they're kind of going bare or without coverage after that certain amount of time.
Well, let's talk about going bare, because
Sure.
I know here in Illinois, the standard really is about 1 million, 3 million, everybody, and actually in most states that I look at contracts in, 1.3 million is pretty common, sometimes 2 million 4, very rarely like a 250, 750, which I always kind of find a little shocking. But, there are some states, and I'm going to just mention Florida here as being one of them, where I talk with clients and they do not maintain malpractice insurance, or they do not care about tails. And to me, I find that shocking. As a lawyer, we think about liability.
Yeah.
Why is that happening? Is that something we can expect is going to expand, or what can you tell us about that?
Yeah, it's just I guess the regulations or the laws in Florida. I don't think we should expect that in other states. That would take quite a bit of time and legislation and all that stuff. But in general, a lot of physicians don't need insurance there. I think the rule is if you don't have it, you're supposed to have a clear sign on your office to let patients know. But most physicians there are getting 250,000 limits, 750,000 limits. People believe that if you're the way that the laws are written, that's adequate amount of coverage. And if you have more, you essentially will get dinged for a higher settlement or payouts on claims. Again, you would be a better expert. I don't believe that, but that's just the trend in Florida. The other part is, since a lot of people are not insured there, like I was saying before we were talking about that, essentially all the physicians that are insured are paying for the uninsured because the premiums are very high in Florida.
Right. I think obviously that's a crazy situation. We'll have to see what happens. But one of the things that comes to mind is when you move or you start a new job, like at a hospital or something like that, one of the things they're looking for is proof that you've always had insurance coverage.
Yep.
And you put yourself in a situation where you can't prove it. You did go bare, there is risk and liability. So
Mhm.
it's really unclear to me how we would deal with that situation. I assume a new employer might be willing to accept an indemnification that if you were to get sued for anything that happened before you started, that you're on the hook. But I would guess that that could be a deterrent for somebody to hire a doctor who's gone bare. But I personally, I can't imagine what's going to happen in that situation. So that's something to think about for anyone listening who's gone bare, about what the future holds. It's not just a decision about now, but this could impact you down the road. So I think that's important to think about. Well, let's talk about indemnification provision. So one of the things I know is that in many, but maybe not all, malpractice insurance policies, and you be able to clarify this for us, there is a strict prohibition that the insurance carrier is not going to cover anybody but the individual named under the policy. So
Yep.
when you go out and you promise to indemnify your employer or some other third party, if you do anything negligent,
Mhm.
you're kind of adding them to the policy itself by doing that.
Mhm.
What are your thoughts on that? And then we could talk about what I see, from a legal perspective as the only option to address it.
Sure. Yeah, I think like we were talking about earlier, there's like the standard markets and the non-standard markets. In the standard carriers, I don't think most of them will offer any coverage for, like you're saying, any third-party facility or anything like that. Physicians who are in that position, there's always the non-standard market. The non-standard market is a little bit more customizable. So you can go there to get those type of situations. I actually can give you an example. We have that with one of our clients. So their actual policy, like their physician policy, is with the standard market, like the regular insurance company. But they have their entity, which is contracting with the hospital and require these indemnification clauses. We've taken the entity policy and put it into the non-standard market to include those endorsements so they can fulfill the contract obligations.
Wow, that's interesting. And I think that's important to keep in mind because this issue does come up. Usually what we will do is just say, hey, okay, we'll provide this indemnification, but only to the extent that this claim is not covered by insurance. And what we're trying to do is say, hey, we're not trying to add you to our insurance policy, but if the insurance policy doesn't cover it, then you can look to us personally. So hopefully that's a good way to do it, but that's always a very kind of touchy issue. And I feel like people draft those provisions incorrectly all the time and don't really understand, what they're really saying when they require an indemnification like that. So it can be tricky. So one other thing I really want to cover here is what happens when you are thinking of retiring.
Mhm.
And, sometimes when you've practiced for quite a long time, you're at the top of your premium
Mhm.
rate, and it can be super expensive
Mhm.
to suddenly have to buy a tail. So what kinds of things do you see to help doctors out there when they're in that situation? Are there any strategies that they can use? Well, what do you recommend?
Yeah, definitely. So we recommend that a lot of physicians, if they're at that, like you're saying, at the age of retirement, maybe they can cut down their policy or I should say, their practice to part-time, right? And once they're at a part-time coverage, then they can purchase a tail, because tail is always based on what your premium is. So that can help kind of reduce some of the cost on your tail coverage. The other thing is, if physicians are a little older, many carriers are offering free retirement tails. And so we would always place that, obviously the physician has to be in the right carrier to get the free tail. I think most carriers have the rules of 55 and older. You've been with them for at least 1 year, and your retro period or your prior X have to be about 5 years or more. If you qualify for those, a lot of carriers will offer you the free tail, and you just got to make sure you're with that proper carrier that does that.
So if you're thinking of closing down your practice, in addition to the individual doctor policies, usually you have the policy for your practice as well.
Mhm.
And so you might still need to get a tail for that. Is it possible to also get a free corporate tail?
You can, yes. Thank you for bringing that up, actually. Those carriers will also, most of the time, will give you the free tail for your entity or that corporation. I've also seen we've had many physicians, like their nurse practitioners or PA, they were a little younger. So once the practice closed, they also got a free tail built in, and then they continued their own coverage elsewhere in their next
Right.
employment.
That's good to know. So there's a lot of different nuances, with people in terms of their life and their business decisions and where they're working that come up. One final topic that I forgot to ask you about earlier, and I know that, especially because of COVID,
Mhm.
telemedicine has kind of just really taken off.
Mhm.
And I understand that it's kind of hard sometimes to get malpractice coverage if you're doing telemedicine. Can you tell us a little bit about that?
Yeah, obviously, because of COVID, telemedicine turned on like a light switch. um, One thing to keep in mind, the insurance companies, they don't, they're in the dark on this, right? They don't have enough claims data or actuarial data to kind of quantify what premium to present. So they're playing catch up. A lot of physicians, there's many groups like Teledocs or any other larger organizations, they have um, big master policies from carriers to offer coverage for that. We get a lot of questions like one doctor group or like a 4 or 5 doctor group are like, we want to start a telemedicine practice. Well, it's very hard to do that because most carriers do not want to write like a telemedicine exposure policy. And so that's something to keep in mind for physicians, because the first question is, well, how come that group over there is getting coverage? Well, they have larger and more customizable policies. So that's all it is. If you want to do a lot of telemedicine, it's just a little bit of challenge to do it. Most likely you have to go to the non-standard market, depending on what percentage of telemedicine your practice consists of. The one only caveat or to keep in mind is carriers don't mind if you're doing telemedicine for your own patients. So if you already had an established relationship with patients, sure, then insurance companies don't mind. You can do as much as you want. But it's just if you're picking new patients up and you don't know them or you don't know their history, that's where the concern is for them.
Oh, that makes sense. So we'll have to kind of wait and see what develops.
Yep.
All right. So as we wrap up, I guess, why don't you give us not putting you on the spot, but a prediction. What do you see for malpractice rates, going forward? Can we expect increases? Of course, there's always increases, right? Decreases. Is there anything that you see coming down the road in the market?
Yeah, I think all of the physicians should expect increases, honestly. We're in what's called the hardening market cycle. And so prices have been going up for the last few years. I think they're going to be going up for the next at least 3 to 5 at minimum. That's what I'm prepping many of our doctors for. There's many reasons for that. We can talk about that later if you'd like, but that market is just such that most states in the United States, they're seeing increases. There are a few that don't, but in general, everybody has already announced for this year, all of our carriers have announced that they're probably going to raise the rates.
And there's really nothing doctors can do. I mean, there are some, educational risk, risk adverse, steps that you can take to get discounts with your carrier, right? But is there really anything else? I mean, you can shop around, I guess, right? But what else can you do? Anything?
That's about it. Some carriers have like a risk management program where the risk manager of the actual carrier comes to your practice and kind of, I don't want to use, well, I'm not gonna use that word. They kind of assess your practice, okay? And then based on that assessment, either you have recommendations and then if you follow those, you can get an additional discount. They can be burdensome depending on what the practice looks like, but there really isn't. As long as you don't have any claims and you follow your CMEs, you'll get the appropriate credits that are available. But yeah, shopping would be the number one thing that you can do.
All right. Well, there you have it. All right. Well, thanks everyone for joining us. We hope this was helpful and you learned a little something. Thanks to Sruhad Patel for coming from Alera. And if you have any questions, feel free to reach out to me or to him directly. If you want to see more of our podcasts, you can go to ralaw.com. This is the HealthLaw Hotspot, and we'll see you next time. Thanks.
The Roetzel HealthLaw Hotspot is made available by the firm and its attorneys for educational purposes and to provide general information, not to provide specific legal advice. Use of the Roetzel HealthLaw Hotspot does not create an attorney-client relationship between you and the firm or any of its attorneys. The Roetzel HealthLaw Hotspot should not be used as a substitute for competent legal advice, and you should contact an attorney in your state about any legal needs or questions you may have.